Well, one thing is for certain, the more the dust settles, the better interest rates are going to do. And it's been proven, right? We came out over the weekend and there was very little escalation in the war. Oil's been hanging out between about $92 and say $98 a barrel. Traders, they seem to be coming a little bit more to grips with what is transpiring, the price of oil currently, and how long this conflict will last. And right now it appears, hey, treasuries have some appeal once again. We do have tomorrow the Fed funds meeting, as well as we also get some inflationary data. The big thing that I think is going to have potentially some weight on interest rates is going to be the dot plot. We get 4 of them a year. This is going to be number 1, and it's going to be quite interesting given the dynamic of the war, inflation, that horrible jobs report. I think it's going to be really critical because what it's going to do, it's going to set a range for that 10-year treasury. Now, on that Iran conflict front, it looks like traders are a little bit more comfortable with where things sit. It seems as this progresses, we continue to dismantle a lot of their abilities. We continue to kill several of their military leaders, and it looks like, hey, the end is possibly near. And I think that's really what's driving traders at this point to allow the money to flow back in from here until we get some more de-escalation. We hang between 4.15 and 4.25. So if we're right now in the middle, I think it's a decent place to be. Oh, that's right. Who the hell am I? It's always good to mention that. My name is Kevin Weidmark, a.k.a. The Mortgage Mouth, coming to you each and every day with an episode of The Daily Dose, making sure that you never miss a beat. So make sure you hit that subscription button, covering what happened in the marketplace, what can we expect for the remainder of the week, and how it will affect interest rates. So we close the show with float or lock. I am still in that float camp. Unless you are in a time-critical crunch with a lock, you're doing a cash out, you need some capital, can completely understand those situations. Otherwise, I am in that float camp. However, if I am locking, I'm having a conversation with my lender, talking about yield spread, knowing what that is, and possibly getting some of that yield spread to pay for some of my closing costs, realizing that lower interest rates will be coming down the pike. All right, y'all, have a good evening. Thanks for tuning in. Hit that subscription button. Talk to you tomorrow. Cheers.